Just make sure it doesn't not stop record. Someone just randomly stops recording. So this is our vital YouTube footage.
Okay. I need to find out also where it goes, right?
Just go. It converts afterwards. Goes into your downloads folder.
Okay, sweet.
So we are all good. 141. That's quite good.
Yeah. How does it work with the link sending out though?
So what happens is everyone got an email 35 minutes before and 10 minutes before, which basically says click this, and it takes them through to Zoom.
Okay, but if they registered late, then they probably...
Yeah, so what I'm going to do then on half an hour, I'm just going to send an email out to everyone being like, in 3 minutes, I'm just going to send an email out to everyone being like, here's the link.
Okay.
I think that's the easiest way to do it. I need to then find the link.
Yeah, because I've just seen an email from someone who's...
Do you have the link to hand?
The Zoom link? Yes, I do. You know, let me just put it in a sticky note. Stickies are saving my life, because if I run any other note application while doing a video call, the computer cries. So...
Outstanding. So let me. I meant to. I've found it now, so you've got it as well. Just like in case people start emailing.
Yeah, I've got it.
I don't know where they're going to contact people. Not us. It's like maybe on Facebook.
Oh yeah, jeez. Okay.
Again, all these things like I'd kind of switched off for today's event. I'd not done all my panicky oh my god, what stuff. And I've realized that I have to do all these panicky things because otherwise something goes wrong.
Shift is off.
I'm even more pumped for the idea of getting the ETH address that people can just send money to as a way.
Yeah, I know, right?
I've got a tweet storm planned because I need to tweet more to get my Twitter followers up, and I'm going to do like an Oxford alumni one. I'm like, if we could just get these people to send a tiny bit of ETH to Oxford, which I think there's enough of a goodwill story there that you could.
I think so.
I could there's a woman who taught on the Oxford Blockchain Strategy Program thing. He runs a very big fund, and there's a guy who runs another very big fund. And, I can see him out of goodwill sending a little bit of ETH. Okay, you might want to start letting people in.
Yeah.
Especially the OxWEST people.
Yeah. Where? Okay. Oh, that's very strange. So it's this tiny scroll. There we go. Admit.
Okay. Beautiful. All right, I'm going to send the link out one more time.
So yeah, this is Charlotte. She's the events person at OxWEST.
Hi. Let's go change my background.
Also, Charlotte, I've just seen your email. We're sending out the link again.
I'm sending it out right now.
Don't worry. I think hopefully I took care of that one. I sent her the link that you sent me, so hopefully she can register again and it will work. Because I just registered for it now, so that link is working.
What I'm going to do is get a few slides. Oh, that is very professional. I've gone for the 100% the beach, so you can't see that I've got my washing behind me, and you've got a OxWEST one.
Yeah, no, our publicity officer got bored, so she's made a few of these. We have
that's outstanding.
Honestly, Anthony, they run a society like a well-oiled machine. It's
not quite the same at Oxford Blockchain. It's all a bit decentralized.
I think I've done a good job on this. You seem very organized on the other end as well, so sounds like it'll be good.
Yeah. I need to get my slides ready. Okay.
Yeah, I'm going to quickly log into Facebook to check if there are any last minute questions. But I think we should be good to go based on, what are we at, 38 now? 34 waiting?
Yeah. I think the logic of attendance is at most 50%.
Yeah.
Well, is a good proxy for these sorts of things.
So if you guys are happy, if I'll just, I mean, I'll just say like a couple of words on the OxWEST side, but mostly just like a thanks for coming, and out the workshops and so on that are going on in 4th and 5th week. But otherwise, yeah, I'm sure you guys have plenty much to say.
Yeah, no, definitely. And I'm just gonna do a quick pitch for people to join the society. So that includes you, Charlotte, if you're keen. Especially the committee as well. So let me know if
we need
interested.
labour quite badly.
Yeah.
My computer is wheezing, by the way. If I like die or like if I go laggy, let me know.
I will do.
Okay, my slides look not too bad. So I finally got our designer to be like, right, can you make me like some template slides? So I genuinely like would normally just like Arial text on a white background about what, and like some meme. So to have some like generic ones are fantastic.
I know it's very satisfying to have like nicely designed slides and stuff.
Yeah.
Canvas and and like different programs to do them.
Yes. I think I realized more and more every day how bad a designer I was and how I should never be allowed to design anything ever.
Yeah. Okay, shall I admit everyone? Are we good to go? Because we're...
Yeah. I think I set up so they're muted upon entry, but Brandon, might be worth saying something along the lines of if people want to have their videos on. Well,
maybe.
no, it's not. Saying that out loud is like no one is going to do this. This is going to be incredible. But yeah, maybe make sure everyone mutes. Yeah, let them in.
All right.
Hello.
Hello.
Welcome.
This is where it crashes, isn't it? This is where like the whole thing goes down as like the masses come in.
Oh, do I have any controls?
Oh,
there are more coming. There are more and more. Wow, it's never ending.
Yeah, I mean, everyone turns up late. Come on, it's like.
Yeah, I know. I'm surprised. It's quite a large number, eh?
There were 2 people who turned up 15 minutes early, so incredible credit to them.
Legends. Do we weight a raffle in their favor, or?
Do you know what? If you want to do that, like again, what's the PhD in AI of Quantum? I think you could do some funky stuff if you need to.
No, it's not worth it. It's not worth it. Anyone else? No, okay, that's looking pretty stable for now.
Yeah, I reckon I give it another minute or so, and then we could, yeah.
But yeah, just for everyone who's arrived, please could you mute your microphones? That'd be lovely. But it looks like all of them are already muted, so thank you for being so cooperative.
Yeah. Very goodly. I'm going to check that. I think you might need to. Okay, can you enable? Again, this is weird, given you weren't meant to be the host of this, but can you enable screen sharing?
Oh dear, do I need to do that too?
Yeah.
Okay.
I can't even remember where the button is. So, like, again, the extremely technical degree should allow you to figure out.
Ooh.
Hey, there might be a little arrow button on the right of share screen, maybe.
Yeah, and it says one participant can share at a time. Oh, let me try advanced options.
Yeah, it's on there. And then all participants.
I guess, yeah, all participants. I mean, here we go. So
I'm gonna see if I can get this to go.
Oh, Lawrence, welcome.
Is Lawrence Kirk here?
Lawrence Kirk is here.
The main man, the founder. This just got a whole lot serious. Can you is my screen visible?
I can see your screen. Can we have a reaction if other people can see Anthony's screen? Thumbs up. There's a yes from John. Yes. And a Leon sort of firing away. All positive. Great.
Okay, I think, Brandon, you can get going whenever you want to, or Charlotte. I don't know actually what the...
Yeah, Charlotte, you can go. You can go ahead.
Yeah, so I'll just say a quick thank you for everyone to coming to OxWEST's first joint event of the year with the lovely Blockchain Society. So I'd like to point out, so this is a great introductory talk of all that's interested, and we're also running a series of workshops together in 4th and 5th week, which can help you work on your kind of coding with blockchain. So I'd strongly recommend everyone to sign up to those as well, the details of which can be found on OxWEST's many social media, so Facebook, our newsletter, Instagram. So just also let us know if you have any questions with that. But again, thanks everyone for coming, and over to Brandon and Anthony.
Yeah, so thanks for that, Charlotte. It's been a pleasure organizing this event with you. Essentially, yeah, this is looking to be quite a nice introduction to a long series of events with OxWEST for the coming term, and a massive call out to people to join the society, whether it's on the Facebook page or our mailing list. We're updating our website as we speak, so it's going to be brand new and flashy for 2020. And also, it'd be great to grow the committee even further. So please apply to join us if you're interested. Just send an email over to me, and hopefully this could be something special for the beginners. It could be the beginning of your new relationship with blockchain. Who knows? 3 years from now, you could be starting your own startup company, applying for VC funding. You know, you never know. So hopefully you enjoy.
Do you want to mention the raffle?
Oh yes, sorry, I've saved the best to last. So, like at Freshers Fair, we're gonna process the signups pretty soon. But for everyone who has attended essentially this workshop, there will be a raffle where we're looking to send out a bit of ether, not a whole ether, but just a bit to a selected member of the current webinar. So it'll be randomly chosen. Hopefully you'll be the special one, whoever it is.
Awesome. Okay, guys. Well, hey, I'm going to try and share my screen now. Let's see if this works again. That looks like it's working.
Yep, you're live.
We are live. Okay, does that look full screen to you, Brandon?
It does look full screen to me.
Phenomenal. Right, hello everyone. Very nice to meet you all, and so many of you attending today. Always good to see. All interested in blockchain, I hope. My name is, let's see if I can change size, is Anthony. I am not a current Oxford student, I'm a graduate. I left in 2017, which seems like a terribly long time ago. And I'm not on a beach, though I was last week, and now I'm quarantining for 2 weeks. So it's almost quite apt. But I am here to talk to you about a non-technical introduction to blockchain. What I do for a living now, I work for a fund that also runs a kind of cross-university blockchain community. We run lots of hackathons, accelerators, all in the interest of finding really cool stuff at universities that we can invest in. And actually one of our latest investments was indeed a project from Oxford, and that's doing extremely well, which is always good because we haven't had many actually come out of Oxford in the recent past. So I'm going to try and take you through as quickly as possible, and then we'll leave some time for questions. What I'd love to do, guys, if you are inclined to do so, go into chat and put in what your background is. So what subject you're doing, even college. Anything about you that's interesting. I think we lose something with online events in terms of actual engagement and seeing smiling faces and speaking to people. So let's try and make up with that. So please put it in chat and put any questions at all, and I'll try and get around to those as I go. Okay, guys, so what is blockchain? So again, this is a non-technical overview. So for those that are particularly technical, this will be a gross oversimplification, but I'll try and keep it nice and accessible to all. So broadly, a blockchain is kind of like a database. It's it's a load of data. The only difference is it's distributed. So instead of being imagine it like a spreadsheet. You've all used spreadsheets, I hope, and you've a lot of data entries, a lot of rows and columns. It's not quite like on a blockchain, but on a blockchain, instead of it being saved on one computer that a few people can access, effectively a copy is shared with as many people as want to participate in that network, with loads of people, potentially everyone worldwide, if you take the very biggest blockchains in the world, the ones you've heard of, the Bitcoins, the Ethereums. But you might be thinking, why the hell do you want a blockchain on every single person's device? This sounds like a terrible idea, waste of space. Well, there are incentives to doing so, and there are two very particular reasons you might want to do so. For instance, you might not want the data to be tampered with. And so if you keep a copy on everyone's computer, imagine it's like a secret map, and everyone has access to the secret map. And the secret map says where the gold is. Well, maybe you don't really want just one person knowing where the secret map is. You want everyone knowing where the secret map is, or the map to the secrets probably sounds like a more logical statement. But you might want, because that data is so valuable, you might want everyone to have it. For instance, voting data. You don't want anyone to tamper with that. You want that to be a spreadsheet no one can tamper with. And the way you can get around that is making sure the majority of people have a copy of this spreadsheet. And the last step is that it's incentivized. And we'll get into what all these things mean a little bit later, but there's incentive for everyone to take part, not just because they want to protect the data, because they can get something out of it. They can earn money. They can use computing power. They can store stuff to it. Again, this all sounds extremely esoteric, but I want you to keep in mind it's basically like a database, but very different. So how does a blockchain work? Now we're going to talk about money here. Money is kind of the main example, I think, of a blockchain that you might have heard. And this is something that's called a cryptocurrency. And with money, money is a good example because money is effectively a spreadsheet. If I want to pay Brandon, if I want to give him 50 quid, which you should because he's a great chap, if I want to give him 50 quid, I could give him cash, obviously. Effectively, if I were to send him money in a bank transfer, what that actually is money moving from my account, his account, i.e. the spreadsheet that says that Anthony has X is reduced by £50. And on the spreadsheet, on the tab that says, or the row, whatever it may be, that says Brandon's amount, he gets an extra 50. Money never actually moved. It just was in a bank, in the bank's big old kind of spreadsheet. All the banks share a spreadsheet, actually. A lot of, for instance, BACS, those who are in Britain, kind of the way of transferring money in the UK. That is one big spreadsheet, effectively. Money never moved. If I send Brandon money never moved. Nothing changed. All that it is, they added £50 to his account, so £50 on the spreadsheet out of my account. And the key point is that you're trying to avoid people double spending. That if everyone has the shared copy of a spreadsheet, you avoid a situation where I end up trying to spend this 50 quid twice, because then money's worthless. But let's look at this little diagram. So A wants to send B money. This transaction we're going to call a block. So sending the data, sending the money, it's called a block. Now, how do I make sure that when I send this, let's call it e-money, this e-money to Brandon, that I actually did this? Well, a really simple way to do this is just to have a lot of people know that this is the case. So tell a lot of people that I've sent money to Brandon. And what this is effectively broadcasting to everyone. So I'm telling everyone, I'm telling Charlotte, I'm telling Luna, I'm actually just trying to read the names as quickly as possible, which is actually quite a small view on here, which I can't do now. I'm telling all these people about how I have made this transaction. And then if I tell enough of these people, then reputationally, people know that I gave away 50 quid and Brandon got 50 quid. And then eventually, if everyone finds out, we'll agree this to be the case. And this is kind of what a blockchain is. It's everyone kind of agreeing on a state of affairs using technology, which allows me to send data, to change things in the spreadsheet, and in this case, move money. So you might have heard, now I want to go into I want to try and kind of talk about things people have heard as much as possible. You might have heard of mining. And mining is right. You might be thinking, right, well, I don't give a darn hoots about whether Brandon gets 50 quid or Anthony sends 50 quid. I just don't care. But you can see a blockchain kind of depends on everyone caring, so that someone can step up. Luna can step up and say, no, Anthony's spending his money twice. He doesn't have that £50. Mining is effectively saying it's in my interests to verify this happened. And you might say, well, why is it in my interests to verify this happened? Why is it in my interest to confirm that Brandon has got the money and Anthony doesn't? Well, I get something in return. This is the incentivized bit. So for being the person that says, oh, this happened, Brandon did send it to Anthony did send it to Brandon, I get a reward. And this is usually in some sort of cryptocurrency or some sort of token or something. This is where we come back to the idea of a cryptocurrency. This is how the Bitcoin network works. I send some Bitcoin to Brandon. Brandon now has 50 quid more. I have 50 quid less. We need to confirm this has actually happened. So people use their computing power to verify that it has and say, yes, it did. And also to incentivize them to keep to keep using their computing power to verify this has happened. Again, this is a gross oversimplification of what goes on, but people are incentivized to agree this is the case. Okay, so what is great about this system? Now, if you get a system where everyone has a copy of something on their computers, and by the way, I can't really see chat on here because my laptop's being a little bit weird, so speak up if I'm suddenly illegible or inaudible or something. What's great about this? Well, if everyone has a copy of this spreadsheet and a copy of what's going on, it's kind of very hard to change it because you'd have to get everyone to agree. And there's a reason why. I'm going to use Bitcoin as an example that probably everyone's heard. There's a reason why Bitcoin's never been hacked, because theoretically, what you could do is you could take over most of a majority, 51%, of all of the Bitcoin, we call them nodes, or the people that are confirming the stuff's happening, and all of the people participating in the network. But that would take a lot of computing power. There'd be a lot of computers. There'd be a lot of people. And so it's very hard to do this. It's also not in your interest to do so. I won't go into this. It's probably more for Lawrence when he does his technical chat. It's not really in anyone's interest to do so. If they have that much computing power, they might as well use it to verify that stuff's happening. And by verifying it's happening, get lots of Bitcoin. But broadly, unless you're going to hack the whole thing, which has pretty much never happened, it's immutable. It's also distributed because you have lots of different people incentivized to be involved in the network. The smart people on you might see some issues here. But broadly, a lot of different people can get involved with it around the world. And more importantly, lots of different copies of this spreadsheet are shared around the world, which makes it pretty decentralized and trustless. And the big thing I want you to take away from this, beyond the immutability, beyond the distributedness, is I don't need to trust anyone to hold this spreadsheet. So the banks hold this big kind of, we call it a ledger, this big spreadsheet of all the transactions going on between banks. I don't need to trust banks. I don't need to trust governments. I don't need to trust anyone. I can run this whole system that involves millions of people around the world without even having to worry about there being a central point of failure. And those of you that are kind of more mathematically inclined or even business inclined, economics inclined, and the game very well, know that when you have a central party that has too much power, you have a central point of failure, and that could bring down the whole system. So this is what's great about it. So now I want to talk about what are which applications though would you want to have, this looks very wordy by the way, sorry, would you want to have a database that is unchangeable, not controlled by a central party, and everyone can participate in it and is incentivized to participate in it? Well, obviously I've talked about money. This is kind of the obvious one. It's very important. It would be cool not to have a central party involved in money. I don't want to get into political debates. You're right to suggest that those who kind of thinking it through for the first time, that a lot of the early use cases for something like Bitcoin, which is a cryptocurrency, was money laundering and doing illegal stuff because it was fairly, it wasn't going through the traditional system. Actually, it's quite easy to trace transactions on Bitcoin, and people use private versions of Bitcoin. If you're interested in that stuff, just email me afterwards or email Brandon afterwards, or put it in chat and I'll get around to it. But money is kind of an obvious use case. And we talk about Bitcoin here, kind of gone into Bitcoin, so I don't really want to go into it too much more for now. Now, we're going to go a little bit step further. So hopefully everyone got that bit. I can't see the questions, so hopefully there's not too many people going, oh my God, what is this? Now we get to the idea of contracts. So again, contracts are a very good example of something that, again, going back to our necessary conditions, you probably want to be immutable. And the distributed bit doesn't matter here, but you might not want to trust one central party in the execution of this contract. And we get this thing called smart contracts in blockchain. And what smart contracts are, effectively, if anyone's used a spreadsheet and done a simple if-then clause, if this happens, then that happens. And what this allows you to do is, let's take the money example again. You can start very nicely, start tying money to real-world events and digital events. And you can say, right, if these certain things in the world happen, send money to X. For instance, if let's take a profit sharing type device. If this company makes £1 million profit, send this amount of money guaranteed to these people. So again, you can start building up use case here. I don't want to go too deep in because we're going to talk about a few in a minute. An example of a smart contract platform is Ethereum. Now, for those who are more programmatic, you're immediately thinking, well, if I can start having money that I can build if-then clause on the back of it, I can start building applications, decentralized applications on top of this. I can start doing things like building saving products on Ethereum. I could start building lending products. I could start building tokenizing. I want to get into too deep, but you could start doing programmable things. And we'll talk about a few examples of those later. We're talking about money laundering. It's a big issue in crypto, but I think it's slightly overblown how big an issue it is, because now at this point in time, most serious applications of crypto require quite a lot of what's called KYC, know your client, and anti-money laundering kind of legislation or documentation. And it's kind of hard for you to be a big actor in crypto these days without being pretty damn legit. There are some dodgy actors. There are people that use it for money laundering, but it's becoming more and more complicated. And the reason is, eventually crypto is useful, but eventually you want to get into pounds and dollars, what's called fiat. And because of that, it's actually quite hard to get into fiat, at least in big scales, unless you are a legit person. So the money laundering issue is a little bit overblown and more of an issue in the past, and not so much of an issue right now. So I want to talk about some familiar things you might have heard. Again, this is I've chucked a lot into this slide. So we had a Bitcoin. Bitcoin came first. This is kind of like a timeline. And people used it thought, bloody hell, this is cool. It wasn't worth much. I was like, I can send money to random on the internet without like having to trust anyone. This is quite cool. I can pay for my guns and my drugs. That none of that has occurred, but let's kind of go into it all. Then you had Ethereum. People's like, oh my god, I can program this money to do stuff. And you might be thinking, well, Anthony, you haven't offered a really good example of what you can use it for. You've done some esoteric examples. So ICOs were the first big use case of crypto, of blockchain. Crypto just means cryptography. I haven't talked about this at all. It's effectively the way you verify that stuff in blockchain is happening. I don't want to go into it. It's for a much more intelligent person than myself, Lawrence, to get into it. Brandon, am I still okay? My screen just froze.
You're still good. Keep going. Okay,
very good. I suddenly lost my mouse. So, okay, so ICOs are a fundraising device, and what they effectively said is this: they said that I want to, if a certain project, if a certain startup raises 5 million, give everyone a share relative to how much they invested. This is very cool, because you basically now have a means, millions of people in the world, hundreds of people worldwide, to invest in startups without ever knowing each other, completely trustlessly, completely decentralizedly. Now, this did become a bit of a overvalued thing, a bit too much for speculation, but it became a fundraising device because, again, you could say, if this project, send money to this address, if this project raises 5 million, give everyone a share. And that's bloody cool. Fortunately, there was a crash in crypto. There's lots of crashes. There's been some more Ponzi devices. And then we get to something called decentralized finance, which I'm rushing to, I want to get to now. Okay, my screen has completely frozen. So I'm going to fix this now. That is not good. Brandon, you still there?
Yep, I'm still there. So you're still on the timeline from Bitcoin to DeFi slide, and your video is live as well.
Yeah. Give me a sec. I've like completely frozen. I can hear you, but like it's just stuck.
Okay, actually, maybe your video is frozen. Yeah, it's intermittent.
You miss that.
In the meantime, keep posting in the chat, everyone. It is on absolute fire at the moment. Would love to hear some more interesting things. We see first time someone's been taught in a British accent. I couldn't imagine, actually, to be honest. So, because I've always had an English accent at the front of the classroom for me, so must feel quite strange. But yeah, some really interesting subjects and people who have been posting. Keep going. And once again, a call out to people to join the committee. We're really looking at expanding it and growing the committee, growing the society, making sure it's a diverse and welcoming place for everyone, essentially. Oh, we've got a few questions. Sorry, is this only relevant to people with background in tech or coding? No, so this is the non-technical introduction to cryptocurrencies. The more technical series will come later this term. We're looking at 4th or 5th week, series of 4 events. And then who made and maintains the Bitcoin nodes? So briefly, Anthony will get onto this, but good question. Essentially, anyone who wants to take part. So, are you back?
Yeah, I'm back. I think I had a complete crash.
No worries.
Which is outstandingly not particularly useful. So let's go back to it. Sorry, I went. Finish what you were saying, Brandon.
Yeah, so just answering Ryan's question. So anyone, so I could maintain a Bitcoin node at the cost of a bit of electricity. It's kind of part of that open source mindset where, you know, I mean, it's almost like a badge of honor. You like the system, you participate by maintaining a node, but at the moment, the majority of nodes, or I can't say that, but the large number are maintained by miners who mine the currency, because if the mines are close to the nodes, then they can quickly propagate the transaction, which has just been pushed to the network. But that might be a bit too complex. I'll try and simplify, but I'll let Anthony continue on.
Yes, sorry guys. I've been having problems all day, but my laptop decided to completely die. We should be all right now. Okay, so we were on to what something called decentralized finances, and this is a really cool use case of crypto. I'm going to skip a little bit. So what decentralized finance says this: if you can assume that you can start running money without needing governments and central banks, why can't I start building the rest of the financial infrastructure on top of crypto? Like, for instance, settlements of markets. Like, why does, if you think about your way you buy and sell an asset, why does this need to happen to a centralized party? Why can it be completely decentralized? So it's completely peer-to-peer. All that's happening is a piece of software called blockchain is just helping facilitate that in the middle. Why couldn't that happen? And why couldn't you start having situations where I can lend, instead of, if you think what a bank does, it's actually a big lending device, builds financial products, sells them to people. Centralized party that does that. Why couldn't this be done by pooling people's money? Why couldn't, if a bank is responsible for lending money out to people, why couldn't you just pool people's income together, let people generate, let people kind of take the profit for doing so, and lend their money to other people? You might say, well, one person can't do this, but there are crypto projects out there now, blockchain projects out there now, that allow thousands of people to pool their Bitcoin, their Ethereum, and by doing this, you could start lending to people with a normal interest rate. And average person with only $100 worth of Ethereum in their account, in their wallet, can start generating the same kind of profits that banks do. And this happens. It's been a massive bubble over the summer. Bubble used quite strongly, but this has happened. And you can, if you had, actually, say you bought some Bitcoin or Ethereum, you could lend it out tomorrow and get a very nice interest rate, much better than you could in the real world market. So this is something to bear in mind, but something just to touch upon. Again, we're doing a whistle stop talk. What I do want to say though is the majority of crypto, the majority of blockchain applications of this technology. Again, we've skipped a little bit from Ethereum to other blockchain projects. But let's touch on that for a moment. You can do many different things with blockchain. Money is just one of them. We're going to talk about other examples in a moment. But a lot of projects raised money to do applications of blockchain technology called ICOs. They also had tokens. They generated their own coins that used the same mechanisms as Ethereum, as Bitcoin. You can mine them, you can share them, I can use them as cryptocurrencies, I can use them to do specific stuff. But it ends up we have a lot of different basically companies that use blockchain. And most of them do jack shit. They just raise too much money too soon. And their price is a bit of a Ponzi scheme. And people kind of manipulate the price to keep it up, and some dodgy practices happen. And broadly, if I can show you, let's go to CoinGecko. Brandon, can you see my browser?
Yes, the browser is live.
Browser is live. So let's look at the markets right now. So the Bitcoin value, the value of all the Bitcoin in the world, is 221. I think that's billion, if I'm not mistaken. They're in 42 billion. But let's just go to. I just want to go to the shit on shit. Let's go to the 5th page. These guys, and I can tell you, to a man, these are terrible projects that do terrible things. They're just like useless. They're practically dead. Have valuations in the millions, and these go on for miles and miles and miles. And I have a look at them because it's quite interesting. This is a website called CoinGecko. It's just the market. There is a lot of value in crypto. You might say this is cool technology. Yeah, it's cool, but why is it valuable? What's it used for? It's used for not many things sometimes. And a lot of the time there is it's like a poker table. People are just speculating. This is like one of the main use cases of crypto is make more money. Is turn money into money. And don't forget that. It's great tech there, but there's a lot of speculation. Broadly, blockchain is not used for anything in the real world right now. So tumbleweed. Again, cool applications. Decentralized finance is probably the thing that might influence your life in the next probably 5 years. But broadly, it's not used for anything that affects your life right now. Again, this partially influences what the value of it is. Again, my argument is it's extremely overvalued, but nevertheless, because people see it as an easy way to make money, because there's loads of liquidity, you can speculate on it. There's a bit of past history of it going up and up and up. People continue to invest in it, and there are good reasons to do so. I don't want to go into kind of the more. You can ask me separately on my investor outlook on what I would invest in, but actually, in terms of what goes on in your day-to-day life, blockchain is used for very, very little. I've talked about DeFi. Now I want to talk about other things blockchain could broadly be used for. And this is the long list. And I come up with your own examples as well. You'll come up with these broad sets of examples. Everyone does. Global payments. This is decentralized finance, markets, remittances. Doing stuff that eventually a bank does, which is all programmable. Most things in the world are programmable, by the way. Like you can surmise or turn what a bank does into lines of code. There's a reason why they don't. And people want to make money out of it, so they don't want to completely make it into code or make it open source that everyone can use. But broadly speaking, what a bank does is quite simple. It lends money, it builds financial products, it allows people to buy and sell these financial products, and it makes money based on taking a fee for doing so. And there's no reason why this couldn't be decentralized. And we'll talk about why there's a big issue with why blockchain might never be adopted. Politics is another obvious one. An ID is something you want to be immutable. You don't want anyone to change it, and you want it to be a reference point that you can go on to. How many times those that are kind of UK based have you kind of been a little bit shocked how much information you have to give to different parts of government about yourself to do stuff, everything from student loans to driving license to paying tax if you paid tax. It's not a very integrated system. Why do we not just have an identity that is used universally? You can come up with good moral arguments and proper arguments why you would not want to do this, but this is an example. Voting. how many times have you heard that voting's been manipulated? Why is there not a voting system where you vote straight onto something that can't be changed, can't be edited, is not in the control of the government? Maybe this isn't an issue in the UK. It's definitely been an issue in the UK, the US, with the Russian meddling into voting. But in countries where perhaps you're a little bit worried about how legit voting is, and counting of votes is, perhaps it should be on a blockchain, on a spreadsheet you can't change. Supply chains, tracking what happened where, good example. We haven't talked about tokenization and microtransactions. Crypto is very good at allowing you to make assets out of things. I don't want to go into that a little bit. I started it for a different talk, but you could have digital representations of things and make fractions of them and sell them online. This is kind of a good example of things you could do with blockchain. And documents, degrees. Those of you that graduate from Oxford, or even your matriculation certificate, if there is a certificate, this is a piece of paper that you kind of also have to ask Oxford for, or go onto a hub. Why is this not saved somewhere, again, linked to my identity? Again, you can come up with reasons why you wouldn't want to do this, but this would probably work. And I don't want governments necessarily to be able to meddle with this. But yeah, and health data as well. Why can't I move health data between different countries? Again, there's reasons why you don't want to do this. I want to talk about Tony Blair. This is the bit of the talk you didn't see coming. So Tony Blair, I did politics. I did PPE, as I said at the start. I was terrible at philosophy, terrible at economics, quite good at politics because I just read a lot. I kind of figured out about Tony Blair, talked about Tony Blair, was that in 1997 something happened, something called devolution. And devolution is really interesting. Again, you might be thinking, what has this got to do with blockchain? What happened with devolution is power was given from Westminster, from the central government, more power was given to the likes of Scotland, Ireland, or Northern Ireland, Wales, and they changed the voting system there. And the logic, the game theory behind voting system changes is really interesting, because broadly, there is no incentive for a government that's had lots of different voting systems in the world. There's very little incentive. If there is a system that currently benefits a government to constantly gets into power, there's no incentive to change it. No matter the democratic argument or the populist argument or the moral arguments. When you think you're losing, but you still want to stay in power, you typically move to systems where you share power or it's more inclusive. And this is not a device to be democratic. This is a device to maintain your power. The key is power and control. And you can understand why politicians and governments would want this to be the case, probably for good moral reasons. This happened in Scotland in 1997. So Labour, it was previously, I think it was first past the post, and they moved to a system where it was mainly coalition government. And the reason this was that Labour saw that they were broadly losing starting to lose power, and they wanted a system that kept them in government. Do you know what actually happened? It allowed smaller parties like SNP to get a lot more votes, because it was a system that rewarded people with small support a lot more. And eventually it got to the stage where Labour just weren't a big party in Scotland because they'd opened the door. What this lesson shows, this very kind of short political lesson, is people don't concede power because it's in everyone's interest to do so. People concede power in order to maintain their power. And if you see these blockchains as kind of a very democratic device, it's like, you can't change this. This is resistant to centralized power. You can see why people who have power to lose aren't going to do this. Why would the government want to put voting online? If you think you've got power over it, why would the FTSE want markets to be decentralized? FTSE, or the London Stock Exchange, is a company. Like, the company that runs the biggest markets in the UK is itself a company. Why would it do this? Why would it open the doors to this? Why would people who currently benefit over complicated supply chains want to make it opaque so you could see the inefficiencies? There's actually very little reason to do this. And one of the problems even though blockchain might, and again, there are limitations. I haven't talked about the technological limitations today, even though there are very strong reasons, very good reasons to bring in blockchain, particularly with money. Like, this is it would make money much more easy to control and much more clear to use. But there's no reason for the US to do this, because it already has a system that works very well. No reason for banks to do this, because banks benefit from the current system. So I don't want to make too fine a political point, but again, if you see blockchain as quite a democratic tool, it's kind of difficult to see why people would concede power to it. But nevertheless, systems change, societies evolve, and the way to the majority often works. And if blockchain is something good for the majority, that will probably, you see it be a thing. This is why blockchain is not in, despite being extremely valuable, if you see the markets I saw you earlier, a lot of money in it, why it's not actually, none of you use it in your day-to-day lives at all. So I don't know what this slide actually means. I've written this slide. So what, I guess what are the signs of hope? So what's going to happen next? There is lots of money and smart people, because money brings smart people in the space. Incentives are disaligned, because if you get a lot of projects in blockchain have raised a lot of money because, oh my God, cool tech. And once they've raised that money, they're already rich for reasons to do with tokens that I won't get into. And they've usually sold, like they've just got rich because their companies have raised too much money too quickly. They've all practically have 0 users. They have no incentive to make their projects big. The traditional world is sniffing around. So you've got this combination of lots of money, cool tech, and disaligned incentives. This may sort itself out. Who knows? I wouldn't be so sure that anything's going to happen in the next kind of 2 years, maybe 5 years, 10 years. Something big will happen. This is my general point. It's called technology, but who knows what value is actually going to accrue? Is it going to accrue in supply chains? Is it going to accrue in places where it doesn't actually benefit anyone? It's just more democratic. It just makes everyone's lives better, but it doesn't make them monetarily better. Is it going to accrue in the public markets that people might want to invest in Bitcoin or Ethereum or token you've seen or company you've seen? Who knows? I have no opinion. I have a strange feeling it's not going to accrue to the public markets that people trade in. How to be involved? So obviously there's this great society. The point of this society, as Brandon touched on at the start, I'm talking about the blockchain society, kind of site here, OxWEST also does fantastic things. But if you want to get involved in blockchain, come and talk to us. Come to these events. It's a different world this time. We're doing everything online, but we're nonetheless still the friendly people we were before. So come and talk to us. If you want to have questions, if you want to sit down with half an hour with me or Brandon, we're more than happy to do so. There's really an option, again, because there's so much money there, you could have a career in blockchain. You can go and work for a blockchain company as a developer, as a marketer, as a economist, as an anything. There really are some good opportunities there for those that are looking for jobs in the next year. As a software developer, you'll be extremely valuable. Blockchain technology is not hard to do. There's going to be a big hackathon that my company is leading over the next few months that we do every year. That's produced, as Oxford's done very well in, or Oxford students done very well in. So that's a good opportunity to learn blockchain skills. You could be an entrepreneur. People who got very rich off the space. The postdoc who just raised money from over the last few months, who was doing a game theory of complex biology. He is doing very well for himself now, being an entrepreneur in blockchain. You could be an investor. You could go and start trading the coins. Don't do that without doing a lot of research, or talk to me first, because it's you might end up losing a lot of money. You could have applications to business. You could use it as a consumer. You could start using decentralized finance as a way to make your savings grow much better. With a little bit of risk, and I can talk about those risks privately, but with a lot better than they do currently. And a society should not be there twice, but I meant it might have democratic benefits. If, for instance, voting data goes there, or put IDs, or I don't know, data that you don't want government to have a monopoly over goes onto the blockchain, so no one can change it or mess with it. Future events, I'm going to have to go back onto Eventbrite. But bear with, and I'll take some questions for those that have them. Bear with. I had this very neatly set up before, and now because my computer died, it's not there. So more importantly, there is a technical version of this event on Monday the 2nd of November, and then Monday the 3rd with Lawrence, who's here. Lawrence is as good as it gets in terms of giving technical overviews on blockchain. So really do come to that. And then he's doing another set on the 10th and 11th. So if you want to learn how to code in blockchain, which I'm telling you, extremely valuable skill, you could do quite a lot with that. You could make quite a lot of money with that. It's a great string to your bow. It's not hard. This is good. And then we will also be doing a number of events with investors and entrepreneurs to be announced, linked to the kind of hackathon and things that we think will interest you. And if people want to learn how to invest in blockchain, how to set up things like how do I even get Ethereum? Like what is the process for setting up Ethereum? So I can have some, what is the blockchain? I'll have these coins. Then we will can help you with that. Or let us know. So now questions. I've warbled on. I've probably gone on longer than I wanted, but that is a whistle-stop tour to blockchain. So if there are there any kind of things or questions people want to ask, I'm going to stop sharing so I can actually see something.
Yeah, so we've got a few in the chat. So let's just run through them quickly. So, oh, there's an investment question, Anthony.
Which one's this?
So it's from Luna, and it's hi Anthony, which listed blockchain companies would you invest in today, and why?
So I'll be completely honest with you. What happened in the summer was there was a DeFi bubble. So everyone was like, "Oh my God, DeFi! We're all going to get rich off crypto." We should invest in these tokens. So these would be like, what would happen is you get a project where you can lend. I could take my Bitcoin and lend it to Brandon. I could take, people can pull their Bitcoin together and lend any amount to Brandon for a very competitive interest rate. And these are really cool. And then these companies said, oh, if we generate a fee off this, that fee could go to a token, which is effectively a share in a blockchain network, just sit as a stock or share. And, oh, that could give the share money. And then we can fundraise off that. And this happened. The problem was the valuation of this. You might think, those who are economists, there is a very good way of working out what the value of a share is linked to future cash flow. That wasn't quite the way that these tokens are valued, and they ended up being worth billions. And people are like, oh my God, no, but speculation, and they're worth more billions. So everyone kind of were getting involved in those. Basically, what people do in crypto is like they try and get in as early as possible. So like because it lives off hype and speculation. So if you think, right, if I can get in before Brandon could be the dumb guy who I sell it to next. And then Brandon thinks I can get in before Luna, and I'll just sell it. I'll get in. Price goes 8x. I sell it to Luna. I can make loads of money. And this has worked. And this works if you get in early enough. I did that. It went nicely in the summer. I am now in what's called stable coins, which is cryptocurrencies that are just linked to the dollar, so they don't move. So I don't have any at the moment. I think the first move for anyone should be to get involved in Ethereum and just buy it and play with it, because I think that experience is good. Do it on something like Coinbase. Again, ping us afterwards. We'll help you set it up. It's not too difficult. But yeah, I don't have any advice on particular coins because, again, I don't see any reason that. I think the fundamental valuation is wrong. And so I would be, if I'm going to trade or invest, it's event driven, or because we've got investment as a fund. And quite frankly, I just get involved in Ethereum. And that's a good enough long-term bet. If you're willing to hold it for 10 years, you could do extremely well that way. And if you've done it over the last 2 years, probably would have done extremely well as well. But yeah, that's that question done.
Next one is, can you explain the concept of mining, from Jennifer?
No, like not like Brandon. Down Brandon. Like I just cannot do that to any. Like the concept is like you're verifying stuff's happening, and getting incentivized to do so. There's many different ways of actually doing that. Brandon, do you have a more technical?
Yeah, I can briefly run over it. So essentially, Jennifer, it's okay. Actually,
as soon as you go like proof of stake versus
proof of work. I mean, in theory, so okay, so to verify a transaction, that's essentially what miners do. You'll have, let's say, 10 transactions or something like that in a block, depending on the size of those transactions. And the miners essentially have to solve mathematical problems as quickly as possible. Those mathematical problems are linked to hashing algorithms. Just for like a quick Google is SHA-256, if you want to Wikipedia that. But essentially they have to hash these transactions to an output of a particular set of numbers. But the probability of them getting those numbers correct are very small. So they have to try numerous times trying to solve this mathematical equation essentially. And that takes a lot of electricity and a lot of computing power. And then once they get the correct answer, The first miner will send it to the nodes, as Ryan asked earlier about the role of the nodes, and it'll propagate across the network, and each node will verify whether that was the correct answer and say, okay, yeah, it's good. That will be the next block in the chain. But the lower level understanding is pretty hefty. But it's essentially encryption algorithms like SHA-256, which is like military grade encryption things. But
I could not have done that, so I'm just not going into the cryptography side. Like,
yeah. We've got another one from Ryan, which I briefly answered, but it'd probably be good if you give a different perspective or add some more weight to it. Is blockchain actually a specific technology or an umbrella term for the concept of a decentralized network of information? Could competitors to blockchain create similar kinds of networks?
Let me have a look at that. Where is that question?
Oh, does it tell me the time? 6:13 p.m.
Is that actually umbrella for the concept is, so it's definitely an umbrella term, or crypto is usually the typical umbrella term. As I'm using this very loosely, crypto and blockchain effectively describe the set of all things that use blockchain technology in my view. Or for the concept of decentralized network. I don't know about the decentralized network of information. Like, yes, so I've said data very broadly, and I used money as the example because it's very comprehensible. But broadly, we are sending data, which is information, and this data could be money or something that we see as money. There's complex theories about why you should value stuff as money, but I'm not going to go into that. It could be literally files. There are blockchains to do with file storage. It could be stuff to do with yeah, that's kind of broadly. Yes, you could see it as decentralized network of information, definitely, but you please use information very broadly because information can mean a lot of things, and I don't want to get too much into that. I want to touch on the competitors to the blockchain thing. This is very interesting. So what I didn't mention is that blockchain, the code to run a blockchain, again, I use this very loosely because there's many different parties. There's people that send information. There's people that mine and verify that's happened. This is typically open source. Kind of has to be. For everyone to be involved, it has to be open source. So you can go and get the code for Ethereum right now. It's very long. But you could go and get it. You could go and use it. And more importantly, you can copy and paste it and call it Ryan Fincham coin. And that's what people do and have fundraised off the back of that. It's a terrible idea. But if you're going to do something a little bit better, that's what you can do. And there's a kind of a, I guess there's a technical but also ideological reason for this, which is broadly that you want people to be able to say, if this is wrong, I'm going to fix this and I'm going to create my own version. And that democratically, if people like my version more, they can go to that version. Again, I don't want to get into ideological arguments about this because they're mostly bullshit. But predominantly, yes, it's all open source. You can copy and paste it. You can do what you want with it. You can edit it, but you need everyone to agree that that is the case for that to happen. And that's what's good about blockchains. They're fairly democratic. You might say, yeah, but I can't do that. And Brandon could do it, but yeah, even Brandon can't do it. And the people that have enough computing power, have enough time, money to do this are the big players. And in a way, maybe it's all very decentralized. That is a very legitimate argument. And that goes into big dilemmas with how you design blockchains and why there are many different blockchains. Ethereum, Bitcoin, all that big list I showed, they're mainly like blockchains. And Ethereum is the winner right now because it has the most fervent community. There are so many doing others who want to beat them that are worth billions and who do things a little bit different, who trade off the decentralization. We haven't talked about how fast it can be, who trade off how kind of hackable it could be, like, well, not hackable, but how decentralized, how fast, and how scalable it is. What can you do with it? Anyway, I'm going to stop talking again. Any other questions, guys?
Yeah, so from Vivian, what does a blockchain developer do? I guess you've kind of touched on that.
Not very much these days. No, what they do is, it depends. So let me answer this from a few perspectives. At a blockchain company, they would just like write the code to run a blockchain, to build a blockchain, to fix their blockchain. which is very difficult when it's in production, by the way. Like, because as you can imagine, if you've got effective piece of code running on lots of different computers with money going through it or information being traded at scale, very hard to make changes, which is why, for those of you who know a little bit about Ethereum has been trying to move from Ethereum 1 to Ethereum 2, because right now, if I want to send random money, it will, we haven't talked about this before, if I want to send him some money, I have to pay a fee as an incentive to the miners to kind of verify it. Again, I'm using these terms very, very loosely. It's called a gas fee. And this fee has gone up, and I do not joke, like at some points in the summer was like $50 to send. If I want to send him £1, it costs me $50. If I want to just send him the tiniest bit of information, it costs me $50. And you might be thinking, well, then I'm not going to do anything on Ethereum. This is the massive problem. They've been trying to upgrade Ethereum for years. I've been to pretty much all the developer conferences where they've been trying to do so. It's apparently happening this year, but don't hold your breath. So you might be fixing a blockchain or making a blockchain. And what typically, I think and Lawrence can talk a lot about this perhaps next week, because this is what he does, is you can run a consultancy or be a freelance developer to do with blockchain and help real world businesses integrate blockchain into their companies. And this is a valuable thing to do because people don't really understand blockchain. And I'm telling you, it's quite simple. At least the simple, the kind of Solidity stuff, which is the language you typically use with blockchain. For those that are a little bit more development focused, it's not that hard. The complex cryptography stuff, yeah, you probably need to be someone like Brandon, but well, I mean, it's probably not your field of expertise, but someone who's doing a PhD or a postdoc. But that's not what I mean by blockchain developer. So again, I would learn skills. They're very valuable. They're monetarily valuable. Should we go for the one about crashes?
I don't see the one about crashes.
There's one at 6:25. It said, "Can you tell me more about the types of crashes that have occurred, and is there a way to see it coming?" Yeah, let me show you something. So I'm going to show my screen again. So no, if I could predict the crashes, I would be much richer than I am. Like obviously, that's like the most obvious answer ever. Let me talk to you about. Show you this chart. Can you, Brandon? Is my screen?
Yeah, you are live. You can see it.
Hope I don't crash. So let me show you. I want to go lifetime of Ethereum. So this Ethereum launched about like mid 2015. It's worth this much. You're thinking, if I got in there, oh my god, like. And the volume is quite interesting here as well. That's how much is traded. This is very healthy volume, 20 million. You can get quite a lot of it. And in 2016, it started out, it was at like worth $1, but very low volume. Gets up. It's kind of going into, it's already gone up 10 times. By the way, if you had any investment on it 10 times, you'd be insanely happy. So we're at $10. This is about 9 months after it was founded. Then it's gone, we're kind of tricking along, and then we get into 2017. And oh my God, right now it's gone to 20. So again, remember you had it as $1. And it's gone up. And now it's gone from 20 to 372. And you're thinking, oh my bloody God, if I had bought it at 20, I've made a lot more money. I've almost like 20x my money, 18x my money. Then you've got, it kind of dipped. This is quite a lot of, that's like quite a big percentage change to go from like 370 to 240. And then this was the bubble that made blockchain a thing. Ethereum went to almost 1,500. 1,500. Like it was worth 20 back then. It was even here, it's 370, 1,500. And this is where the most money probably was in the space at any point. And then it went from 1,500. I remember this. I was at DevCon at this time. It went to during like a blockchain developer conference. It went to like 100. It was like during like the big Ethereum conference. It was like going. So again, it was worth 1,500, and it went to 100. It went lower. It went to like 80. So this is terrible. And it went back up. Went back up. Went to 260. Down. And then this year's bubble. 131. 2, 399, 488. So again, it went up like almost 4x. All this to say, it's extremely volatile. For those of you who probably know, in percentage terms, that's quite massive changes. So I don't know how to predict them. Again, you can do some stuff on fundamental analysis where you use the moving average. Again, I can talk to you privately about this. I'm not sure it necessarily works, but Yeah, this is why, again, over 10-year horizon, maybe Ethereum does extremely well. But yeah, crashes happen. They're very bad. Okay, next.
We've got a nice two-part question, which I missed it earlier from Luna. I like this one because it's got some fire in number 2. But so do you give any lectures or webinars specific to investing? And then number 2 is, how do you think cryptos will be affected when major central banks introduce their digital currencies, which is likely to be in the near future?
Okay, so I don't give lectures on investing because I'm not a very good investor. So honestly, my strategies, my colleague is much better than me. So he tells me what to do. And he is good because he follows the right people and is very detailed in his analysis. So there's no formula there. I can talk to you privately about. So I think I put my email in already, but I'm going to put it in again. So you can ping me anytime. You can also, I'm going to put Brandon your blockchain email as well. Sorry. So people can email us because you should, and we will talk about this to the best of our knowledge. No, I don't, but I can share some other good resources. Central bank stuff, I don't see this happening anytime soon. I'll be honest, like I said before, like China have talked about it for a while. I just don't see it happening. And also, like, it'll be digital in the sense that, like, instead of this all being a stupidly complicated spreadsheet that no one really understands and has access to, it'll be like brought into the digital age, but it's not really like publicly accessible, probably. It's going to be controlled by China. Like, that is a central party. Like, I don't give a shit. Like, it's like, who cares if it's digital? Like, you're quite frankly, the fiat system, fiat means like normal currencies, works pretty well. And the people who argue like, oh my God, in Zimbabwe we should bring in a digital currency. I'm like, I'm pretty sure none of you have done detailed research of the economic situation of Zimbabwe or Venezuela. And you would need a very deep politico-economic background in either of these countries to be able to make claims about how you should completely change their monetary system to a cryptocurrency. This is a big thing to do. So it won't change anything. What it will do, it will change the market. So if a good strategy, if you do want a strategy, is to build a very nice machine learning algorithm that tracks news events and tries to figure out what type of news events and what sort of signals lead to price rises. That would be the only way I'd do it properly. I'd test it properly. Problem is, there's not much data in crypto, like for 3-4 years of good data. So you've got a problem there. But at least you could probably do it by hand. You could kind of work out, right, why did that move? What was the key event? Can I look for that key event again? That's a decent strategy. Yeah. Any other things?
And then there's, I think, one more from Ryan, which is, how is volume/market cap added to a cryptocurrency? Who makes that decision?
Yeah, let me show you. It's a very simple algorithm. Do you see my screen?
Yeah.
So let's go to markets. It's the sum of all the trading volume. So the market cap is the sum of the number of let's say coins. So the number of Ethereum. Let's take Ethereum here. The number of Ethereum times the price of Ethereum. And there's two different types. There's the ones that are publicly trading and the ones that kind of aren't publicly trading. In Bitcoin, this is particularly important because Bitcoin, not all the Bitcoins in the world have been released, and there is a hard cap of 21 million. I'm not going to go into that now. So there's both the market cap of all the sums in circulation and the market cap theoretically if you times the price by all of the ones out there. Clearly, this would depress the price because if you brought in another load of supply, it suppresses it. The volume is just the sum of the volumes on all of these. Many places you can buy and sell crypto, which, yeah, so that's fairly simple. Cool. Is that?
Yeah, I think that's it. Like, ping again in the chat if I've missed the question, but I'm pretty sure that's everything. So yeah, thanks, Anthony, for a great talk. It's really good.
Not too
pretty entertaining, in my opinion. I don't know how other people felt, but
you know what is entertaining though is giving away free money.
Yeah. That's a good point. So let me, ooh, okay, I just need to export everyone out to a list.
So guys, just a little word from me just to wrap up, that please do, I put 2 emails in there. Mine, again, what we do is we invest in stuff, and we also, we run a community. That sounds incredibly vague, but effectively we partner with as many blockchain societies and clubs at universities worldwide, run big hackathons, give away a lot of money, and invest in the best guys. It's pretty much, it's all to find the best stuff. So if you're interested, our hackathon will be taking place next month, run for 10 weeks. We'll teach everyone about blockchain, give them prizes for building stuff. And we have lots of good events kind of planned over the weeks and months, but please just email either Brandon or me, or do the Facebook or anything. We'd be happy to answer and sit down and explain stuff. But definitely come to Lawrence's talk in a few weeks, because that would be amazing, and it'll be an in-depth technical guide, far better than I could possibly hope to give. So how are we looking on? So the idea is we're going to give out, we have a prize pool. We've mentioned it at the first show. We're going to give out 0.1 Ethereum, and Ethereum is worth about $370. It's about $37. We can give away to someone right now. We're going to try and do this most events. We might increase it, or might decrease it, I don't know. And what we're going to do for the person that wins, we will help you set it up as well if you don't know how to set it up. So this will be your first little bit of crypto to use. Please stay on the line, because otherwise, this could be a little bit awkward. So we'll send you. The process is quite fun. So you set up what's called a wallet in your browser. So in Google Chrome, you will have effectively a bank account, and there are some security things you do to make this safe, but you'll effectively have a bank account, and we will then send, in a matter of minutes, the gas fee has gone down, money to it, and will have some Ethereum, and you can use that then to buy more tokens or currencies or whatever you want. You can lend it to people. You can get interest rates on it. You can buy some more if you like. Who you got? That was a hand
I
up.
think we have a winner.
Okay.
So exporting has been quite annoying, but I know the number of participants, and I can generate a random number. So the winner is Loletta Wong.
Hey. Well, congrats, Loletta.
Thank you.
You just got free money for turning up to an event. Like, it's a win.
Proper speculation, right?
Yeah, definitely. Thank you. What do I do? Do I need to?
We're gonna. I think we have your email because you signed up to the event. So we're gonna email you with how to do it, how to get your free bit of crypto.
Yeah.
So yeah, 37 quid. You can sell it straight into pounds and dollars if you so wish. But we hope you keep it, and it's worth many more in years to come.
Thank you.
And if you want help, like sorting out how to store it or in a wallet or anything, I'm more than happy to help you with that as well, because it can be quite daunting if it's your first bit of crypto, if it is.
Yeah. Would I be able to email you guys?
Yeah,
We'll email you. We'll email you.
Oh, thank you.
Thank you. So for everyone, what we might do is we were very much considering doing how to set up your wallet, how to kind of not trade, invest, but how to like literally get involved in crypto. So please, like, that's kind of a little bit demand orientated. So if you really want that, please can you like email Brandon, not me, email Brandon, and just say, hey, I'd love to know how I can get my first crypto, how I can set up this thing called a wallet, what coins I should, maybe a little bit more information about the different coins so I can make engaged decisions. I don't want to give proper investment advice, but how can I do this, and what cool things can I do with it? Again, if you'd like to have effectively a bank account in your browser to do cool things on the internet, which effectively what blockchain allows you to do. So ping Brandon if you think that's something you'd like to do.
Yeah, and it's also one of the best ways to learn about cryptocurrencies. When you actually have a bit to play with, and you can send your friend, 0.001 of a Bitcoin or whatever it is, and you're like, whoa, yeah, well, who knows? There may be some big players, and whether they could be in China or just across you on the street.
Yeah, you can send it to someone again, without any like border control. Like you just send it. I can send it to anyone in the world in like a minute.
Honestly, it's one of the most amazing things. So just a quick anecdote. I was doing an internship in China, and I had to get paid in Chinese renminbi, but I wasn't allowed to set up a bank account due to my short visa. So essentially, I was living off air for a brief period of time. But within that time, I could have literally had, you know, a friend send me Bitcoin from home, and I would have been able to keep myself alive for a bit without having to ask anyone. But eventually they sorted out my visa and I got a bank account within 4 weeks. But for the first 4 weeks, I was just punishing my visa fees on my debit card.
Yeah. So again, if you want to help setting it up, guys, we'll do a proper event on that, and yeah, it should be fun. But come to the next event for some free money, and good. More importantly, a good talk from Lawrence. Yeah. Okay.
Yeah,
So today we'll upload the. We'll try and share we will share the presentation and the video. We've got a nice new YouTube and Medium account. So for anyone that's interested in hearing back on any of this.
cool. So I guess that's all from us. So farewell, everyone. If you're interested in joining the committee, please send an email. And Lawrence will touch on a lot of the themes Anthony discussed tonight in the next few events. So look forward to see you at the technical introduction to Ethereum, where hopefully by the end of it, you'll be ready to make your own smart contract. So that should be great fun. But yeah, thank you very much.
Thanks, guys.
That's great.